With interest rates soaring into the high 7 and 8% range, the prevailing wisdom from many prospective home buyers is to sit on the sidelines and wait for rates to come down. On the surface, that's certainly a sensible approach, but for some buyers, it may be costing them an opportunity right now. I'm Sean Engmann, a realtor who helps both buyers and sellers throughout the Bay Area. One of the things that I see a lot of is people trying to time the market. Rarely are they correct, because each type of market presents unique opportunities and unique challenges. In the current market, the primary challenge is the reduced affordability of houses. Buyers look at the monthly payment associated with buying a home in this market, and for many it's a non-starter. For those who cannot qualify for a loan at those rates, or for whom payments may cause extreme hardship, staying on the sidelines is definitely the right decision. That description, though, does not apply to everybody. The opportunity to buy comes in two forms: lower prices and less competition. Home prices right now are about 12% off where they were at their peak, and while we're still seeing multiple offer situations, those are less and less common, and there are fewer bidders. Contingencies, which would have been impossible to get a couple years ago, are regularly being considered right now. That gives buyers a better opportunity to shop around, choose their home, and get it at a lower price than they would have at the peak of the market. The overall buying experience is better too. Another thing prospective buyers aren't considering is what happens if rates do go down. There is a lot of pent-up demand that will hit the market once rates drop. Because there's really no reason for supply to increase, a rate drop will increase demand, increase competition, and push prices higher. That means buyers are likely to have less choice about the home that they end up buying, will have have to make more risky decisions to win, and ultimately will still have an affordability problem because the prices are going up. I remember when the market was at its peak and the conventional wisdom from buyers was to wait until the market cools down and prices come down. Well, that's where we are right now. On virtually all loans, you can refinance when the rates go down. What's a better scenario? Buying now when you can pick your home and get it at a lower price, and then refinancing to a lower rate when rates drop, or waiting until the rates drop first and paying more for the home and facing stiffer competition when you try and buy it. That'll make it harder to get the place that you want. The trade-off is a difficult monthly payment for a while, but you'd also benefit from the appreciation of your home when everyone who waited floods the market as the rates fall, driving prices and home values up. What if the rates go up? Well, if you're waiting for the rates to go down and then they go up, it further limits your affordability, and it could push you out of the market entirely depending on your debt-to-income ratio. If you buy now and rates go up, you've made a good decision from a rate perspective. The bottom line is, if you're in a position where you need to move, or you'd benefit from a change of the quality of life that a new home would bring, you should definitely consider buying, and you shouldn't try and time the market. If you're in a position where you can't afford it, or you wouldn't benefit from buying now, stay out of the market. A good example is people downsizing their home. If you're going to pay the same or more for less home, unless you absolutely need to do that, I wouldn't recommend buying right now to downsize. Either way, even though high interest rates stink, there are several benefits to buying now that you should consider before simply applying the conventional wisdom and waiting until rates come down. Thanks for watching. Look forward to seeing you in the next video.